Okay, so we were discussing this chapter, financial statements, and I will just summarize it once again that you have studied the meaning of financial statements. There are two types of financial statements. One is profitability statement and one is position statement. Means one is income statement and one is position statement. And why we are preparing the financial statements? The purpose of preparing the financial statement is that whosoever is looking our balance sheet or our profit and loss account, he should get a true and fair view of our profits as well as of our financial position. Now profits, he will get information from income statement, and about financial position, he or she will get information from our balance sheet. So these are two financial statements which every proprietorship firm or partnership firm or a company or any other form of business organization, each and every type of business organization will be preparing these financial statements in the last of accounting process. And because these are the financial statements which are prepared in the last of the accounting process, that's why these are also called final accounts. See, in the beginning we have discussed that the objective of accounting is to know the profitability and financial position of the business. So for that, you are recording the journal entries, you are recording the transactions in cash book, then you are recording the transactions in subsidiary books like purchase book, sales book, purchase return book, or sales return book. So many books of accounts are there. And after recording the transactions there, you are just classifying these transactions into ledger accounts. And when ledger posting is done, then you are doing totaling and balancing of ledger accounts. With the help of these balances, ledger account balances, you are preparing a trial balance to find out the arithmetical accuracy of your books of accounts. And when the trial balance is proper, then you can move forward for preparation of financial statements. So this is your whole accounting process. Now we have discussed also the users of financial statements, like management needs to make a lot of decisions for the business. So for finalizing the decisions, they need some data. From where they will get the data? They will get the data from your financial statements. Like if you want to analyze yourself in which subject you are doing good and in which subject you need some more attention, that we will get information from your mark sheet, your weekly test or your periodic test, whatever is there. So if you will look at that, then you will come to know that in which subject I have to improve, in which subject I am doing good. So that is also part of management. If you are managing yourself, that investors who are investing money in your business, they will invest in your business only and only when they are sure that yes, they will be getting fair return on their investment. So fair return also explained that they are taking risk by investing money into your business. So that's why they should get return more than the normal return in the market. So if they are satisfied from that point of view, then only they will be investing. Now how they will be satisfying? They will check your performance for last 4 or 5 years at least. And then afterwards, if they are assured that yes, they will be able to generate good return from your business, then they will invest in your business. Short-term creditors like bank overdraft you have taken, or you are taking goods on credit from your suppliers. So you have to pay them back money within 1 week or 2 weeks or within a month or within a 2-3 months period. So that's why they will also look at your financial statements, whether you are earning justifiable profit or not, that you will be able to return their money in time. Then long-term creditors, they are lending you for about 10 years, 8 years, 15 years, 20 years. So first they have to make sure that yes, whether you will be able to continue your business for that long or not. Then you will be, are you generating that much profit that you will be able to pay their interest on time, you will be able to return their principal amount on time. So they have to first check it and verify it from your financial statements of last 4 or 5 years, and only then they will be able to decide that how much loan they can give you. Employees want two things like job security or job safety and then growth. So if you are earning good amount of profits, your business is growing year by year, obviously growth prospects will be greater there. And employees obviously will have a great chance to grow there. But if the organization is not growing, then employees will also not be growing. So this is the concern of employees and trade unions. Government want to make a lot of policies for each and every sector, automobile sector, then housing sector, you can say real estate sector, or railway, transportation, roads. So many policies are to be drafted for each and every sector. Now, first they need some data. How the industry is growing. Like suppose I have to make a policy for textiles. How much GST should be charged there? Or what are the difficulties that the textile industry is facing, like import duty is high or export duty is high. So means a lot of issues are there. So you have to finalize the policies after seeing the problems of that particular sector and after analyzing the profitability and financial position of the different players in that sector. Taxation authorities, there are different types of taxation authorities, like GST is a tax. Then income is a income. There is a tax on income tax. So there are different taxes levied. So different tax authorities need this data to analyze your income or to analyze the amount of transactions done in your business. That they will be verifying that whether you are giving them right tax or there is some discrepancy, whatever it is. Then now these are the users of your financial statement. They will be looking at your profitability and financial position for their own purpose. Now coming to income statement. Income statement means trading and profit and loss account, and it will help you to know your profit or loss, whatever you have generated in a particular year. So it is divided into two parts. There are two parts of income statement. The first part is called trading account. It shows the gross profit or gross loss. Gross profit means the profit earned by the core activity of the business. Like suppose you are a bookseller. So your core activity will be purchasing the books and selling the books, or purchasing stationery items and selling the stationery items. So that is your core activity. So now in purchase you have expended some amount, and in sales you have generated some amount. While doing purchases, there are some expenses which you might have incurred for the purchase of these goods or for bringing these goods into your godown. So these are called direct expenses. The expenses which are directly identifiable with goods are known as direct expenses. So the difference between the sales and purchases and direct expenses is termed as gross profit. Then the second part of the income statement is profit and loss account. See, many expenses are there in the business. Like suppose you are paying rent. Now rent can be of different types. If suppose you are paying factory rent. So in factory, what you are doing, you are producing goods. Suppose in a month you are producing. Now listen the question carefully. Suppose in a month you are producing 12,000 units of any particular article. In a month you are producing 12,000 pieces, 12,000 articles in a factory. And suppose you are paying a rent of rupees 12,000 per month for that factory. Suppose you are paying rupees 12,000 per month as rent for that factory. So now how much it costs per unit for rent? How much is the cost per unit for rent? Listen the question carefully now. Again I am repeating. You are spending 12,000 per month for rent, and you are producing 12,000 units in that factory per month. The production is 12,000 units per month, and you are paying rent rupees 12,000 per month. Question is clear? Try to increase your participation. Okay. So now tell me, I'm asking the cost per unit for rent. For rent only, I'm asking what is the cost per unit. Yes, very good. This is my question. You are producing 12,000 units, and you are paying 12,000 as rent. So the cost per unit will be rupees 1 for rent. Got it? So this expense is called direct expense because it is clearly identifiable and associated with the number of units produced. But if suppose I am paying office rent, I am paying office rent now. So now office rent has nothing to do with the factory. It is a separate matter. So that's why the expenses for office, expenses of selling, these are actually indirect expenses. So there are lot of expenses in the business. We can divide them into two categories. One is direct expense and one is indirect expense. So like suppose I have purchased goods from Delhi and I want to bring it at my location and I am doing business in suppose in Mumbai. So transportation cost of the goods for transporting the goods from Delhi to Mumbai is clearly identifiable and associated with the number of articles I have purchased. So that's why that transportation cost will become direct cost. But if I am selling the goods and I am doing some transportation expense, that is selling expense. Selling expense will be classified as indirect expense. Like we have discussed in capital expenditure, whatever the amount of expense you are doing, till the point you put to use that asset, that will be capitalized. Same is the case with here. Whatever the amount you are spending to bring the goods in a sellable position, whatever the amount you are spending to bring the goods in a sellable position, till then all the expenses are called direct expenses. Like purchasing raw material, paying transportation for that material, for the transportation of that material, then paying wages to the labor for loading and unloading of that material, then processing of that material, paying rent for the factory, paying wages to the labor, indulge in production process, then packaging. It means each and everything which you are spending before the article is sold, converting that raw material into finished goods. So that all expense will be part of your direct expense. That will also go to trading account. But other expenses which are concerned with office, administration, selling and distribution, these will be termed as indirect expenses. So all the indirect expenses will go to profit and loss account. So there are two places for writing the expenses. One is trading account and one is profit and loss account. At both places you will be writing your expenses. But the difference is in trading account, which type of expenses you will write, respond in the chat box. Let me check how many of you are able to answer now. in trading account, which type of expenses you will be writing? Yes, very good, very good. Others, please also respond. Okay. I clearly told there are two types of expenses. So direct expenses will be charged to trading account. Direct expenses will be charged to trading account. And indirect expenses will be charged to profit and loss account. Indirect expenses will be charged to profit and loss account. So first you will deduct your expenses in trading account, then whatever the expenses left means indirect expenses will be charged to profit and loss account. And after deducting these all expenses from your all incomes, then finally you will get your net profit. Net profit is your actual amount of profit earned during the particular year. Whatever business activity you have undertaken in a particular year, the final result after charging all the expenses to your income. So meaning of trading account account is clear. Now we will complete the trading account first. See, trading account is prepared for calculating the gross profit or gross loss. So the objective of preparing trading account is that you should know whatever business activity, what is core activity of my business, how to my core activity, that is termed as gross profit. It is prepared to show the result of manufacturing, buying and selling of goods. Whatever the profit I am earning through only buying and selling, or even if I am a manufacturer, then manufacturing, buying and selling, what profit I am earning due to these activities. It records the amount of purchase of goods and the expenses which are incurred in bringing that commodity to a sellable state. I already briefed it out a few minutes back that whatever the expenses you are incurring to bring your goods at a point where you can sell it, then it will be termed as direct expenses. So here the point D means all the direct expenses you have to write in your trading account. A trading account is also called goods account. That point I will explain later. Right now we will not be able to understand this one. When I will link it with your previous understanding, then only you will be able to get it. This point we will discuss few minutes later. Okay, now coming to the need and importance. So why should we prepare the trading account? It provides information about gross profit. It provides information about the direct expenses. It provides comparison of closing stock with those of the previous year. You can compare, like suppose this year your closing stock is rupees 20,000. Previous year closing stock was suppose rupees 15,000. Then your previous year profit was suppose rupees 12,000. So that way you will be able to analyze that my closing stock is increasing day by day. It provides safety against possible losses. So because you will be knowing how much profit I earn with my purchasing and selling or with my manufacturing, purchasing and selling. So that's why you will be able to analyze your profits accordingly. Now this is the format of trading account. If you want to take the screenshot, you can take the screenshot. I will just reduce its size so that it will come on the screen. Still it is not coming. Just a minute. It's very small. First take its screenshot, then I will explain it. So this is the format of trading account, and there are only few accounts to be written in this account. If you do it proper practice, you will be able to prepare it properly. Okay, now see the format. First is the heading. It should be there always whenever you are preparing a trading account. You should write the heading trading account. Then next line, debit credit is mentioned, clearly mentioned. For the year ending, question will tell you a date on which day you are preparing a trading account. Generally, it is 31st March of any particular year. So if the question is informing, then in this blank you will put that date. If there is no information given, then at least you have to write this one for the year ending, then blank, leave the blank because you don't know the date, but you have to write it. Then particulars rupees means there is no date column, there is no ledger folio column, there is no journal folio column. Now what accounts you will be writing in trading account? See the first account, it is opening stock. First account is opening stock. So whatever the stock was there with you on the very first day, that account you will be writing here, and that is known as opening stock. Means suppose when you started business in this particular year, suppose we take the financial year 2019-20. So on 1st April 2019, suppose you were having 10 mobile phones costing you rupees 1 lakh. So that means your opening stock will be 1 lakh. Then whatever amount of purchases you have done in this particular year, that purchases will come here, and these amounts you will get from your trial balance. In trial balance, you will find how much purchases I have done for this particular year. Purchases should be net, purchase minus purchase return. So purchase return should be deducted from purchases. Whatever you are getting, when I am explaining, please confirm it in the chat box so that I will be able to understand that yes, you are getting. It should not be in the last of the account. Someone will speak, sir, I was not getting anything. Then it is difficult to explain. So whichever point you are not getting, or if you are facing any trouble, you have to inform me in advance or at the point of decision only. Clear? And it is a very important account. Next is two wages. So wages are that expense, but now wages for what? Suppose you are paying wages for the construction of building also, your office building also, and you are paying wages for the loading, unloading of the raw material or your goods also. So that wages will come here only which you are paying for your goods. The wages which you are paying for the construction of your office building is a capital expenditure and it will not come here. So wages is normally a revenue expenditure and that's why it will come here. So wages, if it is written in the trial balance, you will write the wages. Many students are not responding in the class despite I ask daily that yes, please keep responding, at least inform me that we are listening. Despite that, they never respond. Until and unless I will take the names, they will never respond. Yes, next is to wages and salaries. Wages What is the difference between wages and salaries? There are two accounts written on the screen. So wages are pure wages. Wages are pure wages, which you are paid for your goods. Wages and salaries means that two accounts have been combined. Wages we generally pay to the unskilled labor. It is also called blue collar job. Salaries we are generally paying to the officers, our employees. It is generally called white collar job. So what is happening that in my business, suppose there are 20 workers and 3 officers. The salary part of wages is very sorry, the expense part of wages is very high. We will get these all from the trial balance. We will get these all information from the trial balance. After the preparation of trial balance only, we will be able to prepare the budget. Got it? Okay. So because my number of workers are more than the number of officers, and the wages part is much more than the salaries part. So that's why what I have done, that I have combined the salaries account also with the wages account, and the part of salaries is less in comparison to wages. So that's why wages have been written first and salaries have been written later. If I reverse it, suppose I put it like to salaries and wages. So that salaries and wages means which one both of them is having major part, salaries or wages. If I write it like salaries and wages, which one according to you will be having major part, salaries or wages? Okay, we will discuss this point in the next class, and you have to practice it 2-3 times, prepare it with your hand, then only you will be able to do it.